CNBC TV 18, celebrating 15 years of leadership.
The top story tonight, the government gears up to announce major fiscal and tax sops to push the Make in India project. Ministries make their recommendations to Finance Minister and the announcements are expected in the upcoming union budget. This on a day when the HSBC manufacturing PMI for December hits a 2-year high.
I think earnings growth in India over the next 2 to 3 years will be quite strong. I think Indian earnings growth will get back to 20% plus.
Bulls shake off their New Year hangover and Dalal Street is up and running in 2015. The Sensex gains nearly 400 points. The Nifty nears 8,400. Veteran fund manager Akash Prakash of Amansa Capital expects earnings growth of over 20% over the next 2 to 3 years. Crude prices continue to cool off. Brent falls below $56 a barrel. The rally on Wall Street as US investors kick off 2015 in style. European markets also pare down their losses. From a Volvo bus ride to yoga lessons, the Gyan Sangam of PSU bankers kicks off in Pune. Banking Secretary admits there is a wide disparity between performance of government and private banks and he hopes to address it. PSU bankers will make presentations tomorrow on their reforms agenda.
We are in the process of taking the call and it should happen in the course of next couple of days.
If you're planning to buy a car, get ready to shell out more after the government decides to withdraw the excise sops. M&M says the burden will have to be passed on to consumers. It will be announcing price hikes in a couple of days. That's another exclusive.
There should have been an empowered committee to which any kind of discussion with any state or individual should have gone back to the empowered committee.
West Bengal's Finance Minister Amit Mitra reiterates his state's opposition to GST, wants the centre to bring in the constitutional amendment bill back to the empowered group of ministers to satisfy all the states. Piramal Enterprises' shopping spree continues as it plans to invest 5,000 crore rupees in infrastructure projects over the next 2 years, acquires 2 road projects for 700 crore rupees. That's another exclusive this evening. And on the hour, an easy way to turn your smartphone or tablet into a TV remote and stream mobile content onto your television.
RBI has been telling that is a massive effort, banks have done a good job and they should be adequately compensated.
Well, that's over 100 people you see there, including top PSU bankers, policymakers who have all descended in Pune for a 2-day Gyan Sangam, a retreat to brainstorm on reforms and to breathe new life into India's public sector banks. The grand finale will be held tomorrow with the Prime Minister and the Finance Minister along with the RBI Governor all set to address that gathering. Will this help to reinvigorate state-run banks that are riddled with bad loans among other problems? Good evening and thanks for joining us on India Business Hour. Highlights from the first day of Gyan Sangam is coming up in just a bit. But first tonight, the big CNBC TV 18 exclusive. In a bid to push Prime Minister's pet project Make in India, various ministries are lining up with 1-year to 3-year action plans. These plans involve providing fiscal and tax sops to boost manufacturing. These proposals could find their way into the Finance Minister's upcoming union budget in February. Ritu Parnabhoyan joins in with exclusive details on that story. Ritu, what is each ministry proposing now?
Let me start with what this exercise was all about. 25 sectors and ministries representing 25 sectors presented their 1-year and 3-year action plans to the Prime Minister as far as Make in India is concerned. According to sources, several of these action plans will be actually implemented in the budget itself, and the Prime Minister himself will be monitoring these proposals which were presented before him. Let me now quickly take you through what some of these ministries proposed. Commerce Ministry, for example, has called for reducing the import duty on gold and silver to 2% in the next 1 year. In addition, the Commerce Ministry has said that the import duty on polished gems that should be completely done away with, and the import duty on capital goods related to gems and jewelry sector, even that should be done away with in the next 3 years. Now, Oil Ministry on its part has told the Prime Minister that a oil industries development cess should be imposed, and the government can use these proceeds to promote the oil and natural gas sector, infrastructure development in oil and natural gas sector, and the government can actually raise up to 10,000 crores per year through this cess. Of course, the Oil Ministry clarified that the final call will lie with the Finance Ministry on this. The Aviation Ministry has told the Prime Minister that MROs need to be given complete exemption as far as service tax is concerned in the next 1 year itself. It has also said that airlines should be given infrastructure sector status, and they should be allowed to raise, they should be allowed to issue tax-free infrastructure bonds, and also easier ECB norms for their working capital. Last but not the least, the Steel Ministry has told the Prime Minister that in the next 1 year, import duty on steel that should be raised, and not only that, the steel as a product should be exempted from FTAs and should be taken out of FTAs with countries like Japan and South Korea because of a huge spike in imports that we have seen from these two countries due to the FTAs that we have with them. With that, it's back to you.
All right, Ritu, many thanks for that. Well, let's move on. There is also some good news coming in for India's manufacturing sector. The HSBC India Purchasing Managers Index climbed to a 2-year high of 54.5 in December 2014. That's up from 53.3 in November. This comes on the back of faster expansion in output, in new business, and also in foreign orders. Ekta Batra is now joining in with details. Ekta, what is HSBC saying about these numbers?
Well, it was definitely a shot in the arm for economic data. The HSBC Indian Manufacturing PMI for the month of December reached a 2-year high. It came in at 54.5, which compares to around 53.3 on a month-on-month basis. Now, what led to this was faster expansion in output, new businesses, as well as in foreign orders. The new orders, in fact, increased for the 14th consecutive month. The rate of expansion, according to HSBC, was the fastest that we've seen since the end of 2012. Now, talking to CNBC TV 18, the chief economist of HSBC said that the growth in new orders was strong. They expect, however, growth in the second half to be lower than the first half. They expect FY15 GDP to come in at an estimated 5.5%, FY16 to grow up to 6.5%, and will, however, this manufacturing uptake percolate onto the industry's growth rate. When asked that, HSBC said that the industrial growth, according to them, may pick up over the next few months. They estimate that industrial growth may increase to around 2% in FY50.
We expect, growth to slow down in the second half of the fiscal year compared to the first half. But in the next fiscal year, we expect it to increase. So we expect growth to be 5.5% for FY15, inching up to 6.5% in FY16 if investment cycle is allowed to start again.
All right, let's take you through Dalal Street's Friday trading action. What a day it was. The bulls have shaken off their New Year hangover, and how? The bumper rally on Dalal Street with blue chips leading from the front. The Sensex gained nearly 400 points. The index is now within striking distance of the 28,000 mark. The Nifty cracked a century to hit the 8,400 level in intraday trade. It then finally shut shop just shy of that mark. Midcaps underperformed the blue chips marginally. Nonetheless, even that index managed to gain over 80 points today. Anuj Singhal is here with the day's market highlights. Anuj, great second day of the year.
What a strong start to 2015. Technically, if you see the first day with decent volumes in 2015 is what we had today. And really, today smacked of big institutional buying, because the kind of stocks that rallied in trade today was telling you that it was a big FII-driven rally. Big gains in a lot of banking names, big gains in a lot of blue chip names is what drove the market today. Let's talk about some of the stocks. In fact, financials clearly again on top as far as the bulls are concerned. Big gains in all the financial names, whether it was HDFC that was up 4.5%, or ICICI, Axis, all these stocks gaining big time in trade today. Some other heavyweights that supported the market today included stocks like Infosys, Larsen & Toubro, Tata Motors. All these stocks up about 2%. So clearly, big gains in the blue chip names. Among some other stocks, we had Jindal Steel, which was quite interesting. That was one of the big gainers today. That was up 3.5%. Asian Paints was up 3.5%, and BHEL 2.5% higher as well. Cement stocks also had a good day in trade today. ACC, Grasim, Ultratech, they were all higher in trade. It was a large cap driven day, but there were some mid caps as well which were gaining ground. So High Beta did good today. JP Associates 6.5% higher, Unitech 3.5% higher, South Indian Bank was up 6%, and some other stocks which came out of nowhere really in today's trade with big gains were Man Infra, Marksans Pharma, and P-Power Defense. So as of now, the Bank Nifty is at an all-time high. The mid-cap index is nearly at an all-time high, and the Nifty is still about 3% away from all-time highs. It will be interesting to see whether it can go there in next week.
All right, let's move on and get you a market view then. Veteran fund manager Akash Prakash of Mansa Capital sees Indian corporate earnings growth by over 20% compounded over the next 2 to 3 years. He also sees the stock market delivering a similar growth rate. Here is a slice of that exclusive conversation that he had with CNBC TV 18's Lata Venkatesh.
Reserve Bank will cut in 2015. I think it's quite likely. I mean, I would say it's very high probability. Whether it's Feb or March, April, frankly, I don't want to comment. I think what Mr. Rajan is doing is right, which is that he wants to be 100% sure that he has really broken the back of inflation and it's not cyclical. Because I think the concern he will have, obviously, is that, has enough been done on the supply side for him to be confident that this is a permanent decline in inflation, right? Because you may argue that food prices, what has really been done, the APMC Act issues are still there. The big gap between farm to fork, the big price being eaten up by middlemen. Had they done enough to incentivize supply and clean up the bottlenecks and change the procurement and the whole? There are a lot of policy issues on agriculture and farming which I don't think have been fully addressed. So I think that is obviously, I think, what's partly holding him back. Plus the fact that the government does still have a fiscal issue. They've got some space, but 4.1 is going to be a very challenging target, I think, for this year if they can hit it, and we'll see next year. So I think he will cut. I think he may be slightly later than what people expect. But I think he seems determined that when he does, it will be quite significant. I think he made statements to the effect saying that when we do cut, it will be deep and it will be significant and stuff like that. So in calendar 2015, I think very high probability. Sometime in the first half, I would say high probability. And when it cuts, I wouldn't be surprised if it's 50 basis points at a time when he does finally do the cuts.
Okay. Let me come to how the markets themselves are perceiving the government. How are you perceiving? Are you happy with the way it has only been ordinances, and for a large part of the first 6 months, the Prime Minister was visiting international capitals rather than state capitals? How would you assess his record?
Yeah, I think it's better than people think, in the sense that there was some disappointment on my part as well initially when we all thought that he was next Margaret Thatcher. He would, Mr. Modi, the Prime Minister, would come in and do a slew of reforms in the first one or 2 months. Maybe that was naivety on my part or on our part, that obviously India is a far more complex political animal than we recognize. And I think the fact that the BJP and the party had not been in power for more than 10 years. So I think they also took some time to kind of come to speed with the challenges and how to get back into government and run. I think in the last couple of months, I think they've shown determination. I think these ordinances are a positive, because it gives them a clear signal that we're not going to tolerate disruption for the sake of disruption. And I think some of the stuff that they're talking about in terms of pushing things, pushing stuff through, is a positive. So I think people should have less doubt on their determination to get things done. I think they still need to use the budget in 2015 Feb to give a really clear, concrete game plan that, look, over the next 3 to 4 years, this is what we're going to do. This is why the economy slowed, ABCD, and here are the 4 things we're going to do. And not like 20, just give 4 or 5 steps saying, here are the 4 or 5 things we need to do: improve public expenditure, whatever things, clean up the the farm, supply side, stuff like that. I think there's still some lack of a concrete economic game plan, which investors can hold on to and kind of judge the government. But my own view is that they are on the right track. They are doing a lot of stuff. They're clearly showing more determination now. I think they recognize that they've been elected because of a development mandate, and they need to deliver on that. So I'm positive. I don't think that's going to short circuit the India story.
Okay. Well, let me come to the question which investors will really want to hear from you. We've done 31% in 2014. Realistically, how much can indices do in 2015? And if you want even a 24-month horizon?
Yeah. No, I think, the scope for multiple expansion now I think is limited. I mean, you would argue that interest rates going down will improve multiples, but, Indian multiples aren't. So maybe there's some scope for multiple expansion with interest rates coming down, but not dramatic. So it's going to be an earnings growth story from here, India. In the first stage which is standard, the first stage of the markets go up, multiple expansion, earnings growth will catch up. So we're now in the earnings growth phase. So it really depends on earnings, how strong you see earnings growth. I mean, I think earnings growth in India over the next 2 to 3 years will be quite strong. I think Indian earnings growth will get back to 20% plus because you're coming off a low base with the economy accelerating, with rupee at 63, 65, whatever it is, with oil commodity prices down. I think the earnings growth will be strong. So I think over the next 2 to 3 years, India will compound at 15 to 20%. I think that, which is really what my view of earnings growth will be. I'm making an assumption that multiples will hold. Because interest rates are coming down, they may not expand. So the bulls will argue that multiples will expand. I said, don't assume that. Assume multiples hold. Earnings growth over the next 2 to 3 years will be 15 to 20%. So the market should compound at that. I think that's a realistic estimate to make. Now, there could be front-end loaded. You could have 1 year of 35%, the next 1 year of no growth. Or it could be zero growth this year and 30% next year. I mean, that you can't...
What's the probability?
Of what?
Of zero this year or flat this year? And
no, I think I personally feel it'll be front-end loaded. Okay. So that if the budget is a strong budget this year in terms of structural reform, giving a concrete game plan, investors gaining further confidence that this government is serious about moving ahead, I think the market performance will be front-end loaded. So you'll have a stronger year than people think if they deliver on these things I'm talking about.
And do remember to catch more of that entire conversation only at these times on CNBC TV 18. Moving on, India's top PSU bankers and select policymakers are in Pune for a 2-day retreat. The event, called Gyan Sangam, will be a brainstorming session to give a facelift to PSU banks. The Prime Minister and the Finance Minister will address the gathering tomorrow. Speaking at the event today, the Banking Secretary was candid enough to admit to the wide disparity in performance between private and government banks. Bankers will make presentations tomorrow with their agenda for reforms. Financial inclusion has been one of the big talking points at the Gyan Sangam. Here out RBI Deputy Governor S.S. Mundra and Banking Secretary Hasmukh Adia on ways to further financial inclusion.
I think there is an acceptability on the part of government also that banks have done commendable job. In doing that commendable job, they have done the expenditure also. And there are various proposals which are right now under discussion. I think they will get crystallized maybe by the time we end the discussion tomorrow. That there can be more than one modality whereby banks can be adequately compensated for the effort they have put in. So as far as we are concerned, yes, we are observing everything very carefully.
More than 10.3 crore new accounts have been opened under the PMJDY starting from 26th of August till date. Now there is no particular target, but our target is now centering around ki household coverage kitna hai. What is the household coverage? तो उसमें हाउसहोल्ड कवरेज में अभी तक हमने जो सर्वे किया है हमारी बैंकों के माध्यम से उसमें ये निकल रहा है कि अभी तक 98.4% हाउसहोल्ड्स आर ऑलरेडी कवर्ड. सो नाउ वी आर नॉट हैविंग ए टारगेट ऑफ ओपनिंग बैंक अकाउंट्स. नाउ वी आर कवरिंग ईच एंड एवरी हाउसहोल्ड.
Well, more on that retreat. CNBC TV 18's Manasvi Ghilani is in Pune tracking all the developments there. Manasvi, all the bankers shared a Volvo bus from Mumbai to Pune. It was quite a sight. What's been happening? We hear that apart from all the talk of restructuring and improving banks, there are yoga lessons that are doing the rounds as well.
That's right. Today, the entire banking and the financial services fraternity was extremely busy. In fact, as we speak right now, they are working in 6 different groups on 3 presentations that they have to make tomorrow to the Prime Minister, to the Finance Minister and the RBI Governor, where they will seek their inputs on how to push forward the performance of the public sector companies. But on the same side, what we also understand is that Jayant Sinha has been also making a point to them while he says that the government and the banking fraternity both have to look at empowerment rather than entitlement of people. In fact, he also encourages that we open up opportunities for jobs, which will not only allow them to in terms of credit growth, but also as a fraternity and economy as a whole. Apart from this, he did mention that on the government side of it, they're looking at focusing on good governance, and here on the governance is both pro-poor and pro-business. So it's going to be a win-win situation for both if the banking fraternity and the government came together. Apart from which, they're also saying that the banks need to collectively work together and not on a cross-purpose basis. This is only going to help the system as a whole. Also, they should look at adopting international standards and practices, which will only help the Indian economy. Yes, the dynamics are different, but it's always good if it's possible to adopt them. Also, if all these goes through and if all the recommendations that come in tomorrow by the groups are in place, we can anywhere expect the growth of GDP to be between 7 and 8% in the near future. So these were his inputs and what he had to say. Now it's only tomorrow that we get to know on what were the outcomes of these three different presentations that were made to the top notches of the industry, and we'll get you all the details tomorrow on that.
All right, Manasvi, thanks so much for that. Now, speaking of banking reforms, the split of top posts at 4 PSU banks is the start of a major reform move, and we believe that this will be instituted at other banks in due course. Let's now go across to Sajit Mangat, who is also joining in from Pune. Sajit, how will the roles be demarcated? Did you get any sense after talking to bankers today?
Sources say the splitting of chairman and MD's role for public sector banks is one of the biggest reforms undertaken by the government so far. What the government is trying to do is trying to bring in more accountability on the board of public sector banks, and hence they started off by splitting the role of chairman and MD for 4 banks, and eventually over a period of time all other banks will have a separate MD and CEO, and which will be reporting to a non-executive chairman. The chairman of the bank will be having powers wherein he will be signing the balance sheet for the public sector banks, and the MD and CEO will be accountable not only to him but also to the board. The government is also trying to empower the board of public sector banks by ensuring that directors are also asking questions on the balance sheet of the bank and the functioning of the bank. It is possible that in the future that the chairman of the bank, which will be a non-executive role, may come in from a private sector. The government may also look at retired bureaucrats who have relevant experience in the field to chair the board of various banks and financial institutions. So that's the logic which is coming in from some of the finance ministry sources, and that's the reason why the government is portraying this as one of the biggest reforms for the banking sector as far as public sector units are concerned.
Thanks, Sajit, for joining us with all of those details. Sajit Mangat reporting from Pune that the chairman and managing director post is going to be split up across all PSBs. And while we're talking about the banking sector, Finance Minister happy with the brisk action in the sector over the last few days. Prime Minister Narendra Modi and Arun Jaitley spoke at an event organized by ICICI Bank as it celebrated its 60th anniversary. Narendra Modi called on banks to take up social causes and further what he called finance swachhata. The PM also said cashless transactions as one of the solutions to deal with black money. The who's who of India Inc. were present at the Jubilee celebrations of ICICI Bank.
हम हमारे फाइनेंस के जो एरियाज है उसमें एक नए क्षेत्र का इजाफा कर सकते हैं क्या, और उसको प्राथमिकता दे सकते हैं क्या हमारा ग्रुप एक साल के भीतर बैंक फाइनेंस की मदद से नौजवानों को प्रेरित करके कम से कम 1 लाख स्वच्छता के एंटरप्रेन्योर तैयार कर सकते हैं?
Out of the approximate 24 crore families in India, only 58% had access to banking. And that's when we took up the challenge that between 14th August last year and the 26th of January this month, let's approach at least 7.5 crore more families and move closer to this target of financial inclusion. In the month of December itself, we exceeded the target.
Moving on, prospective car buyers will have to brace themselves to shell out a lot more for their new cars soon. Sports utility vehicle major Mahindra & Mahindra, for one, intends to pass on the entire increase in excise duty to the customers. Other car makers may be following suit as well. CNBC TV 18's Alexander Matthew and Arif Sherwani report.
That's the sound of frustration. And it's a feeling car makers in India have been dealing with for over a year now. Demand is just not picking up. Labor troubles are suddenly par for the course. And now the government has withdrawn the one benefit that had brought some relief. Car makers like M&M say they have no choice but to pass this latest whammy on to the consumer. So forget the 1 to 2% price hikes that the industry normally rolls out. This time prices may go up by 3 to 6% in one go.
We are in the process of taking the call, and it should happen in the course of next couple of days.
Of course, this sharp hike in prices may push prospective car buyers to rethink their planned purchases. But that's something car makers are bracing for as well. M&M says that for the foreseeable future, it will continue with its no production days of 5 to 7 per month to manage inventories, meaning capacity utilization could take a hit.
Talking about the capacity, surely actually capacity is underutilized. And that's the reason actually of no production days. If you ask me roughly what's your capacity utilization, it would range from 65 to 70%.
New launches, however, will continue to be the key strategy to drive growth in 2015 as well. M&M says it will launch 2 new platforms in the passenger segment and 1 in the commercial vehicle segment over the next 12 months. These new launches will be supported by new drivelines and engines, including a petrol-powered offering, something its SUV portfolio does not have. In Mumbai, with Alexander Matthew, Arif Sherwani.
More news from Motown. Tata Motors ends 2014 on a high. The company's sales in December rose by 10%. And what's more, passenger sales had risen by 30% when compared to last year. Growth in commercial vehicles remains sluggish.
No such luck, however, for Bajaj Auto. Total sales in December declined by 3%. Domestic sales continue to be sluggish as it saw a big drop of 16%. Three-wheeler sales were the only silver lining as those numbers were up by 16%.
In a move to strengthen its presence in the oil and gas space, Bharat Forge's German subsidiary has acquired a French company that specializes in oil and gas machinery. The company has been bought for about 90 crore rupees. And with that, it's a wrap on this edition of India Business Hour.
Thank you for watching.
CNBC TV 18, celebrating 15 years of leadership.